Welcome to the True Commercial Real Estate Podcast, your investor resource for all things truly commercial. Whether you invest in industrial, retail, medical office, storage, single tenant, or any other type of non-residential real estate investment, this is your podcast.
Hey everybody, Logan Hartle here with the True Commercial Real Estate Podcast. We've got another great show for you today. Today we have Sohail Hassan. Sohail is a multifamily real estate developer, and managing partner at Marketspace Capital. Marketspace Capital is a private equity real estate firm that focuses on sourcing value-add commercial real estate investments for its capital partners, as well as providing attainable housing for its residents. Today, Sohail and I are going to discuss the usage of blockchain and tokenization and how that relates to real estate. So welcome to the True Commercial Real Estate Podcast. Sohail.
Thank you, welcome. Logan. Pleasure to be here with you.
Yeah, we're happy to have you. So your bio is awesome. I've listened to your podcast, other podcasts you've been on, and just shared a little bit with the audience about your background. But can you give us a little bit more of your background? You know, how'd you get started and what led you to commercial real estate?
Sure. So I said, first and foremost, I'm really a technology guy, right? When it comes to using new technologies and really understanding how it could potentially disrupt different industries. And I would say it's kind of started initially in the solar industry. I'm very passionate about the way we consume energy in this country. And, you know, with the revolution and advent of solar technologies, we've been able to reduce the, total cost to install solar for your home. And in parts of the country, like California, where energy prices are really high. There's a big demand for this. And so, we got in early on this. And, me and a partner started a technology company that was related towards the solar industry that ultimately we exited out of in 2017. And that's when I was kind of left of looking what's next for me, right? I had spent the last 10 years of my life dedicated to the renewable energy industry, the last 4 with this particular startup. And then understanding what was next for me. And I felt like, in properly doing the research, that true wealth in this country is generated through investments in real estate. And that allows you kind of the freedom of the lifestyle that you would like to live, whether it be traveling, which is in my case, my wife and I love to travel, but it really affords that type of lifestyle, right? And so ultimately took, whatever earnings I had from that exit and basically started looking to deploy it into real estate investments. And that's when I was introduced through a former roommate of mine at Texas A&M University. I was introduced to Dr. Masaki Oishi and David Rodarte, who have now become my 2 partners and are also my 2 fellow managing partners at Marketspace Capital. And, really at that time, Logan, the conversation was, how can we use technology to disrupt the real estate industry? And by that technology, of course, I mean blockchain technology. And for those of you that may not know what blockchain is you're really kind of impacting the entire financial technology sector, right? In terms of a different payment system. Obviously, it has led to the creation of Bitcoin as well as other, Ethereum and different things like that. But the technology that's being used to power that is actually what we were very interested in, and how we could potentially use that technology and apply it to real estate investments. But understanding that, back in 2017, the industry was still kind of in its infancy, we took a, wait and see approach and built up our AUM like traditional investors would, right? And Dr. Oishi and David made their very first investment together back in 2011. So they had already done some multifamily, retail, and office products. And, when I joined the firm, that's when they wanted to kind of syndicate and be able to start raising funds and take it to the next level, which I think, Logan, is the natural evolution of a private equity real estate firm, right? You have a couple of guys who kind of use their own money to try it out. And once they have a proven model and, some basic experience, that's when you can start syndicating and you get your friends and family involved. And then ultimately you start taking on outside investors. And then, at some point you get sophisticated enough to where you start, attracting institutional capital. And I would say that's kind of where we're at, right, on that, and in terms of that evolution. But, we once again have been really looking at how we can use tokenization to really impact the industry and change it. And so right around that 2018-19 timeframe, we evolved to take a more disciplined investing approach. We decided to jettison out of the retail assets and out of the office assets and just focus full time on the multifamily asset class. And I think, we were really lucky, right? Some of us may call it genius, but, I think some of it, a lot of it was attributed to luck, because then the COVID pandemic hits, right? And our retail obviously kind of goes crazy. And, we still own some retail and some office assets, but it wasn't a big part of our portfolio. And as soon as, a black swan event like COVID takes place, retail and office were the first ones that really got impacted, right? But multifamily continued to remain the most resilient. And then you started seeing obviously industrial and data centers. I mean, all of that now is kind of at the top, right? So I think we were really blessed that we started exiting out about a full year before all of that took place. And so through even the pandemic, I mean, we were raising capital and acquiring different assets, and we continue to do that up until today, which today, we sit at right around $488 million of assets under management. And, we have about $1.4 billion of projects that are under development now. Wow. So we're very excited about, what the future entails. And of course, yes, a part of that also includes the blockchain and tokenization component.
Yeah, well, that's awesome. That's a heck of a ride, and it's awesome to hear that you're evolving to starting to bring institutional capital in. It's really cool to see. It sounds like you're a born entrepreneur through and through. With your background in the business side of things, and then selling off the business, and then launching into the real estate side of things. It's really cool to see.
I appreciate that. Thank you.
Absolutely. So you mentioned at the end blockchain and tokenization. So talk to us a little bit about that for people who have no idea what in the world that is. Can you break that down into like a simple terms for people to understand what that is and how we're using it for real estate?
Yeah, absolutely. So I think the easiest way to really analyze this is kind of comparing it to your traditional real estate syndication. I think you and most of your listeners are probably familiar with that process, right? So right now, when I go and let's say for a ground up development project, we obviously go and find the site. We do our due diligence in terms of making sure that, it's where we want to invest our own money, right? And as you know, in real estate, everything is about location, location, location. So part of that is an underwriting to determine the financial capacity of it. Will those rents be supported in that market? But then part of that is also understanding the econometric model of that particular subset, right? In terms of the population growth, demographic. I mean, we get really nitty gritty. We get into like crime rate statistics and educational grades, right? Of different, schools that are in the area. And so we put this all together into a model. And once we decide we want to move forward with it, that's when we proceed to start raising money from investors. And as you know, Logan, like let's say on a deal, typically, our loan terms would be right around 75% leverage, right? Meaning that we have to bring 25% of the equity to the table. And so in this scenario, or in all scenarios, typically our firm, our sponsors will take myself, Dr. Uishi, and David, the managing partners of the firm, will put in 5% of that equity from our own pocket, right? So that leaves us to going and raising the remaining 20% from outside investors, right? And we typically, all of our deals are, only open to accredited investors only. And so, we go out and we raise those funds, right? $50,000 is usually the minimum subscription amount. And we accept that subscription and we essentially, move forward with the construction of the project, right? And so in this scenario, Logan, let's say you made an investment with us for $50,000. I mean, you would have a subscription agreement, a piece of paper that says you own 50,000 units of an LLC, and that LLC owns the underlying real estate asset, right? Now, all the mechanics, you're getting a preferred return. So as long as your money's with us, you're obviously earning. You're earning on top of that money. And then, you're entitled, all of our deals are usually like a 70-30 split, which after you've gotten a return of your capital, and you've gotten any of that accrued preferred return, it then goes to a 70-30 split, right? Typical terms.
Sure.
So in this scenario with tokenization, and, we believe ultimately that, this is kind of the future, that the way that these transactions will be taking place. So once again, blockchain is like the way that you can see it is immutable database, right? Can't be manipulated. And because of that, it's seen as a very, reliable source of information because everything is covered on this blockchain. So that's what's kind of led to cryptocurrencies, as I mentioned. Bitcoin, for example, is just powered by that same type of technology, right? Sure. And so ultimately, we wanted to see how we can use that in real estate. And first and foremost, you should know that it's already disrupting a number of fintech industries, right? From, payment processing is the easiest, right? Where you can essentially remove all third-party banking institutions and have a peer-to-peer network where you're able to exchange currency. But then it's, changing things from, title companies, right? Now, title businesses, you can record the title on the blockchain, which basically makes it to where, title companies themselves are no longer really needed, right? So what it does is this decentralization allows for us to be able to do more and thereby making it more efficient to have to essentially run our operations. And so Logan, in this scenario, you made an investment with us for $50,000. Essentially what we would do is we would issue you 50,000 tokens. Now this token, one token equals $1. And we use what is known as the stable coin, right? The one that perhaps the most popular is called Circle Coin. It's USDC. And so it's basically, obviously this particular coin is, correlating to a actual fiat currency, which in this case is the US dollar. So your one token equals $1, and it never fluctuates, right? So you don't have that volatility from a Bitcoin or Ethereum. Sure. So now you have these 50,000 tokens and they're, in your digital wallet, right? So think of like a Charles Schwab account. It would be a very similar mobile app that you would have set up on your phone. You'd be able to, log into that and you would see essentially your tokens that are sitting there. And after 12 months, you have the ability to start trading those tokens onto a secondary market. Now, the secondary market in this case that we're using is a company called Tzero. And Tzero, they have about 95% of the market share. They're founded by the former Overstock.com guys. They're the only SEC FINRA approved exchange out there. And as a result, they're really ahead of kind of the competition, right? They have the ability to list, actually their new iteration of their technology, of their mobile app. I mean, it's going to be the only mobile app where you can buy stocks, you can buy cryptocurrencies, you can invest in real estate, you can buy NFTs, so a lot of functionality that's coming out there. And imagine every time they get a new use case of somebody coming in, tokenizing their asset and listing it onto their database, they're essentially getting all of those investors that listen to that asset to create those accounts in there. So they're kind of organically growing their user base. Yeah, but Logan, after 12 months, you have the ability at any point in time to take these tokens, to put them onto the Tzero platform. And now anybody around the world can, whether it be in Japan, in South Korea, in the UK, those people who want to invest in US real estate, but don't, know sponsors or don't want to go through the subscription paperwork or agreements that might be associated with that, now they have the ability to do so. So there's two big points to notice out of here. First and foremost is that in these typical real estate investments, there's an inherent lack of liquidity. As you know, when you sign this subscription agreement, you're essentially locked into this partnership and you're not getting a cash out until there's a liquidity event or there's cash flows or we decide to sell the asset, right? But otherwise, you have no real way of accessing those funds in an event that you need it. And so therefore, it's kind of deemed as an illiquid asset. But now we're able to say, okay, after 12 months, you have the ability at any point in time to essentially take it and put it onto this platform and start trading it. And now you have, access to that liquidity, right?
That's phenomenal.
The second biggest selling point is typically there's a high ticket cost that's associated with these investments. As I mentioned to you, the minimum investment for our ground up development projects are $50,000, right? And so you made that investment with me. Now, that most of the US population, something like 93%, are excluded from making these investments because they don't have accreditation, right? So imagine now if you went and you put it out onto the secondary market, you have the ability to fractionalize this ownership. So out of your 50,000 tokens, you only want to sell 5,000 of them. So you put it out there, a sell offer for 5,000. Again, somebody in the UK sees that and they can come and make you, they can, meet your offer, or they can come and make you an offer, right? And then you essentially sell to them. Now that person has the ability to buy in at $5,000, right? So again, it changes the two biggest drawbacks to investing in real estate, which is, again, the inherent lack of liquidity, and secondly, the high ticket cost to participate, because now everybody can participate. And that kind of goes back to the mission statement of why we started Marketspace Capital, Logan. When we sat down for dinner the very first time, again, I told you the conversation was not, hey, let's make all these investments into real estate. The conversation was really focused around how can we use technology such as blockchain to really do something different in this industry. And hence, that's the name Marketspace Capital, right? Because ultimately, our goal is to create this informational exchange environment, right? Which is the market space for them people to make intelligent decisions in which to invest into real estate.
That's awesome. That's awesome. So it takes the need after the 12 months when they're able to sell these tokens. It takes the need for that second investor to be an accredited investor off the table. It takes that away. So
Correct.
Anybody can buy that then. So that's phenomenal. That's great.
That's exactly right. And all you need to do, Logan, and even today, if you wanted to invest into our project, you would go to the Tzero website, you would create an account there, you would pull up the Myra token, and I can get to that a little bit here in terms of the actual mechanics of how we implemented tokenization for our very first project, and tell you about how the simplicity of it all, right?
Sure.
And how kind of the mechanics work through this tokenization concept.
Yeah, that'd be great. One of the questions I wanted to ask you is how is it going to compare to a syndication or a fundraise? How do the mechanics work? We know that there's the preferred return, and we know that at a liquidation point in time, there's going to be a split based on how far you were above the preferred return, different hurdles, things like that. So yeah, if you could walk us through that and the mechanics of
Sure.
how that works, that'd be great.
So the advent of the Ethereum network, right, allowed for smart contracts to be created. Smart contracts, think of it as kind of the functionality of a vending machine, right? Very, very simple. You put in your money, you press a button, make a selection, and you get the product, right? So it's been kind of programmed into this vending machine, that exact model, right? that contract that you made it, right? In this scenario, it's the same exact principles almost apply, right? The same exact terms of the subscription agreement, which in our case, we typically offer our investors an 8% preferred return, right? And then a 70-30 split. All of this has been integrated into a smart contract that, again, exists on the Ethereum protocol, right? And what it does is it allows the user to essentially, after 12 months, and that's, because of an SEC compliance issue, right? Allows them to basically have the freedom to be able to go and put it onto this platform. Now, it's important to note, we decided, okay, after spending a year and a half of doing a pretty significant amount of research, dedicating, resources, time, and money. We had a team of interns. There's like 10 people that have gone through this thing over a year and a half and understanding the mechanics. We've probably spent a little over 6 figures now, Logan, in terms of, hiring the Deloittes of the world, hiring the expert attorneys that have, a knowledge of blockchain. Our typical attorneys that we use for all of our deals, perhaps the best attorneys that we've ever worked with. But again, they didn't know anything about blockchain. So we had to go to someone that specializes specifically into blockchain. And so ultimately, after doing this research, we essentially put together a document. And it was, Marketspace Capital strategic plan towards tokenization. And our goal was to take one project and go through this process. And so the project that we decided to move forward with is a project in Dallas, which is called The Spot at Myra Park. And it's a 250 unit luxury apartment complex. It's right off of Webb's Chapel and 635 in Dallas, which is about 10 minutes from the Dallas Galleria. And, it sits on 6.4 acres. And as I mentioned, we're building 250 units there, roughly at right around $260,000 a unit. So that brings your construction cost to roughly $65 million. Okay. So $65 million is the construction cost. So we had already raised equity through our normal and traditional means. We had 70 investors that essentially put in, again, at a minimum investment of $50,000. And the average investment size was right around $250,000. And we basically have now, kicked off construction on this project. We decided to go back and essentially take that $7 million of limited partnership equity that we raised and tokenize it. So it's important to note here that we didn't go through the process of actually raising capital through this tokenization. We went after the fact, right? After we had done it. And so this really, made it important to develop a communication strategy with our investors. So we hosted webinars, we brought on those attorneys, the tax attorneys, we answered all of their questions. And a lot of them were like, why are you guys doing this? And, we're testing out this technology, right, to understand the mechanics of it, because we believe that this is kind of the path forward in terms of providing liquidity in this marketplace. And again, we're one of the only sponsors that are doing this, right? There are going to be more sponsors in the future, but I mean, for now, this is our competitive advantage, right? Whereas when other sponsors are raising money for a deal, they can't have the ability to say, oh, you can have liquidity after a 12-month investment, right? And so that's what we ultimately, we're emphasizing to our investors, is that this is to their benefit, right? Not even necessarily ours. And so we laid out this communications plan and ultimately, went through this process with Tzero. It is akin to taking a company public, right? Okay. The amount of background information that they take on you, the background checks that they do, they actually send someone to visit the site, the construction site. I mean, so it's that type of visibility that they have. And once, so you go through about a 90 day process of due diligence, and then you get, the green light to move on forward to onto their platform. So once we got onto their platforms, imagine, we were able to get right under 80% of all of our investors, of those 70 investors, to create a Tzero account. And, now after 12 months, they have the ability to start trading those. And, the first investor has completed their trade. They held the investment for 16 months and they sold their tokens at $1.34. So they essentially had a 34% increase from their token price. Now, what's important to note here is that, this is a $65 million construction project. Upon completion, the stabilized appraised value came in at $75.6 million. Okay, so it's costing us $260,000-ish to build, and that $75.6 million number divided by 250 is right around $300,000. Right, so that's the value we're seeking to capture, that $40,000 to $50,000 per door in value. Mm-hmm. So when we went and all those investors, when they raised, they all bought in at $1 per token. But as we continue the construction and we complete milestones, the value of the project is increasing, right? So today, the value, us being roughly 30% through construction, we actually agree that value is probably right around $1.30-ish cents, right? But ultimately, once the asset is completed and tokens start trading, and it's, these tokens are correlated to the net operating income of the asset. And so distributions in the future, right now it's a nightmare when we want to do distributions, particularly for our international investors. Having them, fill out their bank account information, verification, all of that. Imagine, Logan, we can eliminate third-party banking institutions entirely, and we can now make distributions directly to your digital wallet. Right. Wow. And so now you have those that not only are you getting the distribution to that, but then again, the value of that token is, validated through which way. Now, this is where I love to say, when it comes to technology companies like Bitcoin, like Ethereum, it's really difficult to ascertain the value, right? The value is based on the demand.
Sure.
Right? So there's no real financials, there's nothing there. Whereas here, in this case, we have a tangible asset. We have something you can go and touch and feel. It generates income, it has cash flow, it pays taxes, right? And so you have something so the value for real estate assets typically comes from where, Logan?
The NOI. Yeah, you look at the NOI. How much money are you making?
How much money you're making, right? And then it's validated through the appraisal that's done. So what we typically do in order to validate the token price, we have quarterly appraisals that are completed on the project. Now, of course, it's through the same company, so it's not like an update to the appraisal, but all they do is, we've already negotiated a contract with them. Every year, 4 times a year, they just update this appraisal based on current market conditions. So that appraisal is what is kind of validating the token price. And so that investment that those investors made at $1 per share, according to our calculations, once construction is done, and you're getting value from the NOI, the value of that token is closer to $4.
Wow.
So this investor who sold at $1.34, that person who bought it, again, bought it with the idea that there's a lot of meat left on the bone for them moving forward. So ultimately, this is kind of the, how the way we were able to go through our very first tokenization. We decided to do it on this ground up development. And so once again, those investors have all been tokenized. Now, 20% of them decided not to participate, meaning that this isn't a requirement, right? This is an optional kind of thing for our investors, that if they want liquidity, if they want to visit in the future, they absolutely have the ability to. So once again, just know that this isn't something that we're trying to force down their throats. We just want to let them know that, that this is an option for them. And there's those investors that are like, hey, this is really cool. I've heard about Bitcoin and I'd love to learn more. And then there's those investors that are like, please do not bother me. I wanted this to be a traditional real estate investment. I'm not trying to, get hit up with all these emails. And so, we had to tone it down a little bit, but you're always going to have a different, appetite in terms of the investor, how involved they want to be. And in this method, you kind of really give them options to do that.
Yeah, that's phenomenal. That's awesome. So I can see the value creation from the $1 to the $4 through this development process. You buy some land and you're developing it. The foundation's done. It's worth a little bit more money. All the utilities are there. It's worth a little bit more money. The structure starts to go up. It's worth a little bit more money, all the way up to the point where it's fully stabilized. Do you think, because that inherent value is increasing so much during a development process, that tokenization might be better suited for development, or do you think it still could be well suited for acquisition?
Great question, Logan. Wow, very insightful. And that it really took us going through this process to understand and spending, again, years and time and money. But you're 100% correct, right? The amount of value that you can create in a ground up development is significantly more than you can in a value add investment. So that's your number one thing, okay? Is that maybe that value increase is not there. It doesn't make sense to do it in that scenario. The second thing to note is that the timeline for the investment in a ground up construction, we know we have 18 to 24 months of construction timeline. So it's kind of there. You have the ability to where, to do all of this, right? In our value add investments, there's some that we've invested in less than a year, we're out, right? So it doesn't make sense for those types of investments where, there might be a short-term exit, right? It's important for there to be a longevity when you're going through the tokenization process, simply because, even going through the process and getting it on the platform and doing all this, it took us longer because it was our first time. And, admittedly, we spent more money really trying to understand the fundamentals of it. But once it kind of checked all those boxes, we decided to move forward with this. And I'll tell you, Logan, since then, I've had the honor of having conversations with a number of different sponsors from all across the country who have different use cases for tokenization. Here, we're in the scenario where we've already raised capital. We've gone back now and we've tokenized it. And we're going through a ground up construction project. Imagine a land bank company that only buys land. They take investments they have 20,000 investors from all around the world. And all they do is buy land, hold on to it until it increases value, and then they turn around and sell it, right? So every time they do distributions, it's a nightmare for them, right? They have people in Singapore and all this, right? Now they want to do it just because it's going to simplify their distribution process. Here's another one. There's a guy whose great grandfather started their private equity real estate firm in the late 1860s. Okay, so it's been passed down through generations. So some of their investors are the heirs of those families, and they no longer want to be in those investments. But there's no secondary market for them to go and sell their real estate shares. So now they're going through and they're tokenizing it because they know that there's a bunch of people that want liquidity to get out of it.
Yeah.
So these are some of the fascinating use cases that you're going to see moving forward. Value add, we think that from a portfolio perspective, basically taking an existing portfolio and going back and tokenizing that. That's how you're able to unlock liquidity for the sponsors without them having to really sell all of their asset, right?
Yep.
And this was really the very first use case, right? The St. Regis Hotel in Aspen, Colorado, the three investors decided to take 19.2% of their limited partnership shares and start trading them. And they used Tzero. It was the platform that they started trading them on. And today they sit at right under 700 investors, and their token is trading for right around $1.25. So, it shows you that there's already been use cases of this. It's already been implemented. Yes, we are the very first ground up development project in the United States. However, I feel like, right behind it, there's a bunch that are soon following.
Yeah, that's awesome. That's just wild. I love it. So the investor side of things, right? So if you're an investor, you're one of the LPs in the traditional, not the GP side, but the LP side. You're investing. You can tokenize, you can trade, you can liquidate when you need to. Well, how about the entrepreneur? So at the GP side, there's a promote. They get paid after they hit certain hurdles. They might get paid for management, a management fee. So how does that work in the tokenization world once everything's been tokenized?
It's the same exact principles apply here as a normal real estate investment would. Again, it's been in essentially put into the smart contract after a 70-30 split. Our attorney, our legal counsel took the PPM that we had, and they took those same exact terms and integrated it into the smart contract. So everything that you talked about from the 70-30 split after a return on capital and a return of capital is automatically essentially coordinated through the smart contract. Even property management fees, we pay, it's a third-party property manager that we pay a 3% fee to. So they get, their collections are normally through US dollars, right? As tenants are paying their rent, they're paying their, the off operations, expenses, everything. Whatever's left over into a bucket, we essentially tokenize that and we do distributions to our investors.
Wow. Cool. Very cool.
Really exciting.
Very cool. So, and I know you're not a tax attorney. I don't think you are, at least on top of the other things that you do, but are there any tax considerations, involved in tokenization versus your traditional model?
Well, first and foremost, thank God I am not a tax attorney. I think I would shoot myself on kidding. That is a very mundane task as far as I see it, and I thank God that I don't have to do that. But we have very thoroughly understood the tax implications of this. And these are some really good questions, Logan, because as you get into the nitty gritty, this is kind of some of the things that you start uncovering. And we actually had our CPAs get involved and really understand from their standpoint as well. All of so there's a couple of different services that we're using here, right? And now you and your listeners kind of get the benefit of all of this that we found after doing due diligence and research on a variety of different partners, right? So the actual platform that is creating the tokenization is a firm that we're using called DigiShares. They're amazing to work with. They're actually based out of Norway, but they have global presence, and they're basically the very first firm to offer an off-the-shelf process for tokenization.
Mm-hmm.
When I was going through this at first, we was looking at building out the technology ourselves. And I happen to have some experience in that a previous company that we used to own did software and mobile app development in India. And so we have a team of people in India that, kind of resource there when it comes to this technology development. And so we asked them about it and started putting together kind of a scope of work there. But ultimately, it was an expensive proposition. That's when we were approached by DigiShares, who said that, they have a more off-the-shelf type of product that's much more affordable. So that's when we kind of started investigating, and this is what took us down the rabbit hole of understanding all of the different implications of tokenization. Mm-hmm. So DigiShares is one partner. Another partner we look at is full blockchain law. There are attorneys that do all the legal stuff. So they've been doing a lot of the taking the subscription agreement and creating that into a smart contract and understanding what the implications of that is. So a lot of that was done from their end. The other thing, there's a company called CompuShare. CompuShare is managing the cap table. So on a single day, imagine theoretically on a real estate investment, you could have hundreds of trades being done on a single day. On that very same day, you have to have settlements, right? So Tzero has same day settlements, so that's a big deal there. But on that same day, and imagine all those are happening, this is all being done and recorded on the blockchain and managed by a third-party service. And this third-party service essentially gives us a report showing us what trades were done and to who, what individual. And that report is then given to our CPA, and our CPA can then use that to process K-1s for our investors and tax documents, right? Okay. So it's all almost like seamlessly done, because again, and everything is being recorded on the blockchain. So like you can go back and verify anything that you want. And, the process when you go, Logan, to create a Tzero account, I mean, it's a pretty strenuous registration process simply because, they're taking on the responsibility for KYC, for, making sure your money is not, fraud. So they're taking that responsibility. So you have to literally provide a picture of yourself and personal identification. Then they approve you. And that's only then when you can start trading on their platform. Now, all of that information is being recorded on the blockchain every single time you're making a trade on their platform. And so this information is going to our CPA, and then you're just boom, hit with every year you're given a K1, just as simple as that.
Wow.
So that's the kind of the background on the tax stuff. Now, otherwise it's treated like a normal real estate investment. There's nothing different there. If you trade it, then, and you do it within 1 year, you're first and foremost, you have a 12-month cap. So it can't be like a short-term investment, right? So it's basically making kind of a long-term investment in terms from a tax perspective. And then you have the ability to trade, but once you trade, that's when you're essentially paying capital gains on it, right? Just notice that 1031s are not available to do it in this structure, at least yet. And then I'll leave you with this, is that there's, like a question I often get is like, hey, what do you see as kind of one of the downsides or kind of one of the weaknesses of this industry as we go forward? And the answer I usually give is regulations, right? Because we're a little bit ahead as a private market, ahead of government. And so they're catching up and they're slowly kind of understanding the impacts of blockchain and, what we're doing with it here. Now, the thing is we welcome regulation. The reason being is because, when we are getting this information for accreditation, I mean, we have everything on them or on our investors, right? Their name, their info, in terms of what they've made, the last 3 employment history. I mean, all that stuff is kept now because we have to keep it on file. So we're going above and beyond what is even required from the SEC in order to be compliant with them. So, we really feel like these regulations will weed out all of the bad actors, and therefore we support it, right? And so that brings me to the tax side of it as well. Is that it has yet to evolve, right? There's still things that need to be done from that perspective to make it simpler and easier. But nevertheless, I mean, this is kind of, we see hopefully by the end of this decade, I mean, I predict that this will be kind of the way that these transactions are done.
Yeah. No, that's phenomenal. Yeah. I agree. I see it. You mentioned several use cases. I can see it happening in the even in the institutional space. I deal a lot with trying to find properties for large investors, and a lot of them, might be they may be REITs or a large hedge fund. It could be but a lot of those spaces are, or a lot of the larger properties that we deal with are bought by insurance companies or pension funds. I can see use cases in those scenarios as well, where there's these large, massive portfolios of properties, and they want to be able to trade in and out of them very quickly. So I see where this is heading, and I'm super glad we got to do this interview today, because this is really cool. It's something that I learned about initially listening to you on another podcast, and I'm just psyched we got to do this today, because every time I hear you talk, my wheels just start spinning, and I'm like, holy cow, you could use it for this and this and this. So
Yeah.
this is cool, man. Yeah, very, very
Absolutely.
cool. So someone just getting started, somebody who says, look, I believe that this is the way this is going, and I want to try this. What would you recommend? Who do they need to talk to, and how do they get started? Is there anywhere they can go to learn more about it?
Yeah, absolutely. So, we're big believers of transparency and kind of sharing our knowledge with others. So everything that we have gone through in learning about this process and what it entails, we've documented.
Mm-hmm.
And so we have a plethora of resources that are available, not only on our website. If you go to the blog section of marketspacecapital.com, you'll see kind of white papers that we've written with regards to, how tokenization can be used. We've just scratched the surface, Logan. We're talking about, just a couple of things, right? From, imagine you're talking about REITs and the portfolios that you're looking at. Imagine the ability to record all of the due diligence, the title, the property surveys, all of this stuff on a blockchain that lives with that project. And from now on, when you want to look into the due diligence of a REIT, all of those different properties, everything is just easily organized and classified for you, and you can trust the information and know that it hasn't been tampered with. So there's so many different use cases we've just talked about from like the sponsor side. We talked about the distributions and the simplicity of that, the paperwork, due diligence, but the future also is in raising capital, right? And having the ability to go out and have people and increasing the universe of your investors. Because right now you're only marketing to U.S. accredited investors like us in some cases. Imagine that pool of investors growing to the entire globe through this tokenization concept. So there's just a lot there. So I would recommend, and I would say this is all still in its infancy. We are probably 5-6 years into this thing. And if you look at and I hate to be as cliche as this as everybody says, but the invention of the internet, right? When it first came out and how long it took for mass adoption. We're far ahead of that timeline here, but it's coming. And so I would say now is the time to really get involved, to understand it. I have some friends I recommended in starting consulting firms that are doing this, because I get asked every day, right? Almost, that people are interested in this type of tokenization for this property, and what are your thoughts on it? And I think there needs to be somebody who can really kind of shepherd them through this process. So really understanding it, but there's not really a lot of experts out there right now, because there's such a few projects that have gone through this. But we're always a resource. My firm, I myself am. You can connect with me on LinkedIn or email us. Be happy to share with you kind of even our strategic plan moving forward. I'm in the process, Logan, right now of writing a book, specifically a guide to other sponsors to tokenizing their asset. So really trying to, have them learn about the ins and outs of it, including some of the advantages and disadvantages, right, that we've seen, right? Let's not be all, it's not all cherries, right, in terms of how this goes. There's sometimes issues, and I think, some people tend to cherry pick and only present the best ones, but we want to make sure that we don't do that. And we also highlight some of the disadvantages of going through the system as well.
Yeah, that's awesome. So do you have a title yet for the book, or no?
Yeah, I think it's a guide to tokenizing your real estate asset. That's kind of where I'm going, but I'm
where you're leading. Yeah. There you go. Do you have a rough timeline for when we can expect the book to be out?
Yeah, so I'm hoping that within the next month I will have it completed from my end, at which time it goes through an editor, and then it will go towards publishing. And my timeline right now is like September of this year for it to be available. So I'll certainly let you know.
Awesome. That sounds great. Everybody listening, just be sure to look out for that. That's awesome. So, So, I mean, you mentioned LinkedIn and Instagram, so people can get a hold of you there. This is So what are your handles there? What's your Instagram handle? Because I don't think we're there.
Yeah, actually, I'm not really active on Instagram, so let's not. Push that one, but,
we won't push that one. No Instagram. LinkedIn.
LinkedIn. I'm very active. I mean, I'm on Facebook, but. Aside from that, they can always email me at my first name, Sohail, at marketspacecapital.com. And once again, our company is very active on all of these social media channels, and we're always posting updates there. So please do follow us.
Awesome. Absolutely. Check them out, marketspacecapital.com. I checked out the website before this. It's got a ton of information on there and just really cool stuff you guys are doing. So Sohail, this has been a great interview. I'm going to let you go. We've been talking for about 45 minutes here, but everybody do check them out. It's just a wealth of information, and I'm sure you all learned a ton, just like I did on this interview. So Sohail, thank you so much for being on the show.
Logan, it's such a pleasure. And, I'm sorry your partner couldn't be here today. I know that, and I actually, and this is just me between you and I. He mentioned he was living in Canada, and I think I told you I was in vacationing over there. So he made some suggestions on where to go check out, and we actually went and did one of them.
Nice.
So
very cool.
I mean, there's not like a lot of touristy stuff to do in Toronto, so.
Sure. Yeah. Aurelian will be bummed he missed this one. He was excited about it, but he had a family event, but he'll catch this one, and hopefully maybe we can have you back on sometime in the future. So
appreciate that, man. Well, thanks again for the invite. It's been a pleasure.
Absolutely. Thank you so much.
Bye-bye.
Bye-bye.